it's Mish. Welcome back to my channel where I like to bring you guys along with me as I navigate my faith, fitness, and financial journeys. So today is day 9 of the 21-day financial fast that I'm on, where I'm posting a video every day from November 1st to November 21st. So today's chapter was focused on investing. And investing is one of those things I feel that if you don't feel comfortable enough to invest, then you should go out and seek the appropriate people to help you gain a better understanding of investing. So all of my investing, well, I would say 98% of my investing is done through my 457, which is my retirement plan. So I'm going to insert a quick clip from earlier this year when I was able to sit down with one of the representatives, and she gave me a better understanding on how to actually read the prospectus sheet, and then we were able to go through and kind of diversify. I don't think that that's a word, but my accounts were already diversified. However, I wanted to take a more aggressive approach, being that I still have decades left until I'm technically able to retire. So this is what we actually came up with. Did not have investments in areas like small cap or bonds, so that is something that I incorporated. When it came to my large cap, I pretty much was already investing aggressively, but then in the other areas, I pretty much had too much investment in those specific categories. So what we came up with is to invest aggressively. For me, we were going to contribute 33% to international stocks, 7% to small cap stocks, 10% to mid cap stocks, 40% to large cap stocks, 7% to bonds, and 3% to capital reserve for an aggressive growth. So I hope that that was helpful. As I said, I am taking an aggressive approach towards things. 2 suggestions that I have along the way. One, of course, is Dave Ramsey within this book. He talks about, of course, after you're out of debt, and that's, quick side note, that's one of the things, like, I'm still deciding to invest because I plan to be out of debt in the next few months. So I'm not going to stop my contributions to my investing, even though people do highly suggest that you stop investing in all shapes or form and take that money to throw towards your debt. I already made the decision, like, I'm not. So it is what it is. But in there, he talks about, the different stocks and stuff to invest in when you're just starting out. Another book that I have not read yet, just because I feel that I'm not all that far along to actually read this book and to understand everything that's in here, is this book here. I hear people commonly mention this book left and right. So at some point I will read that book, hey, maybe later in 2025, I don't know. I just know that I'm not there. But one of the suggestions that I do have is that, look on the internet. I know Wall Street Trapper, he talks about different types of investing and giving you a solid understanding of the market. And then also, there's different, if you're investing in mutual funds, there's the large cap, mid cap, and small cap funds. Typically large cap funds are your funds like Amazon and Apple and Microsoft. Those are estimated to be over $10 billion in market capitalization. And then your mid cap funds are range between $2 to $10 billion. And then your small cap funds are going to be under $2 billion. But this is just things that I've gradually learned over the years through sitting down and speaking with people, through looking up things on YouTube, and then also through taking personal finance class. The knowledge is out there. It is up to you to go and seek that advice. You also know that the more time you waste means that you're missing out on compound interest. So earlier in the year, I was looking at my portfolio and I'm just like, I just feel I should be experiencing more gains than what I'm actually experiencing. And at that time, I was probably around the 10 to 12% of gains, either quarterly, and then on a yearly basis, I was like right under 15%. So I just looked about 2 weeks ago, and up until this point, I do happen to have a 20% rate of return. And then for the year, stamp, and then for the quarter I was at 16 point something percent. So now I'm in that range where I'm experiencing the progress in the financial gains that I would like to see my investments growing. But at the end of the day, it is a risk. There are plenty of times where I was just losing money like month after month after month, and I was just like, hey, if you still believe that these stocks are going to recover, then you leave your money where it's at suggested. There's going to be ups and downs. Things aren't going to perform as well. But one thing that I do say, don't look at those on a daily, weekly basis. Like, I look at mine on a quarterly basis. There has been a few months here and there where I have looked at it like each month for the whole entire quarter, but most of the time I'm really probably only looking at those stocks about 3 to 4 times throughout the year. And then once a year I will sit down with a financial advisor and we will go over the prospectus sheets to see how each of those stocks perform throughout the year and compare it to other stocks to see if I want to switch out some of the actual stocks that I'm investing in. But as usual, you guys, I want you to take the time to enjoy your own journey, and I will catch you guys in the comments into the next video. Bye.